What's going on, folks? Welcome to the Trade Well podcast, brought to you by Trade Well Management. I am your host, Donovan Marquez, the podcast where we discuss everything trading these financial markets, as well as acting as a personal trading journey and road to profitability. Thank you for tuning in, and I hope you enjoy the show. What's going on, everybody? Welcome back to the Trade Well podcast. I'm Donovan Marquez, and today we've got a really exciting episode for you. In this one, we're talking about something that a lot of day traders rely on to make their decisions: indicators. Now, if you're thinking, what the hell is an indicator? Don't worry, you're not alone. Indicators are basically tools that day traders like myself use to figure out when to buy and sell by showing us patterns in price movements. Today, we'll break down what indicators are, how they work, and introduce you to a few of the most common ones that traders use. And as well, as always, guys, we'll keep it simple so you can start using them without feeling overwhelmed. Now, let's start with the basics. What exactly are indicators? All right, so indicators are like extra tools that help you make sense of what's happening on your price charts. They take the raw data like price and volume and then turn it into something more visual like lines or colors on your chart. They help you spot trends, figure out if something is overbought or oversold, and even give you clues about when price might reverse direction. Think about them like your car's dashboard, for instance. When you're driving, you don't just look at the road. You also check your speedometer, your gas gauge, and other indicators to help you make a smart decision. Day trading indicators do something similar. They help you read the market better so you can make more informed trading decisions. Now, trust me, there are a ton of indicators out there, but you don't need to know all of them to get started. We'll cover a few of the most popular ones today that are perfect for beginners to kind of get your feet wet so you can get used to not only looking at the chart, but also reading that data that an indicator can give you as well. Okay, so one of the most commonly used that we're going to talk about, and you'll hear mentioned all the time, is moving averages. What is a moving average? A moving average does exactly what it sounds like. It averages out the price of an asset over a certain period of time. Now, why do traders use it? Well, instead of just looking at the daily ups and downs, a moving average actually smooths out the price data so you can spot the overall trend more easily. Now, there are two types of moving averages. There's a simple moving average, or an SMA, and an exponential moving average, EMA. The SMA calculates the average price over a set number of periods, like 20 days or 50 days, so on and so forth. It's slow and steady and gives you a clearer look at the general trend. The EMA, on the other hand, gives more weight to the most recent moves in price, so it reacts faster to price changes. Let's give you an example. If you're looking at a 20-day moving average, the SMA will give you a smooth line showing the average price over the last 20 days. If the price is above the moving average, that could signal an uptrend, while it's below, could signal a downtrend. Moving averages are really, really helpful for spotting trends, and a lot of traders use them to figure out when to enter or exit the trade. Now, another one that is used by a ton of traders, especially new traders, is the RSI, or Relative Strength Index. What is the RSI? The RSI is a momentum indicator, and it's super useful for figuring out if an asset is what they call overbought or oversold, quote unquote. Basically, It measures how fast the price is moving up or down and gives you a number between 0 and 100 real quick. Here's how it works. If the RSI, or here's how, let me say this, here's how most people use it. I'll say that. If the RSI is above 70, that usually means the asset is quote unquote overbought, which could be a sign that the price is going to pull back soon. Now, if the RSI is below 30, this means that the asset is quote unquote oversold, which could mean the price is about to bounce back up. For example, if a stock's RSI is at 80, it's likely been rising too fast, and there's a good chance it might drop soon. Now, on the flip, if the RSI is at about 25, it may be a good time to buy because the price could be about to rebound. The RSI is easy to use and really helpful for spotting potential reversals in the market, guys. Now, another one that is super popular among traders is the MACD, or other people have several names. MACD, MACD, but the actual name for it is the Moving Average Convergence Divergence. Whew, what a mouthful. All right, let's talk about that indicator. It's a funny name, but has powerful results. The MACD, which stands for Moving Average Convergence Divergence, sounds fancy, but let's go ahead and just break it down for you. The MACD helps you spot changes in a trend's momentum. It does this by comparing two moving averages, usually the 12-day and a 26-day EMA. The MACD gives you a visual representation of how these two moving averages are moving together or apart. Now here's what to look for, guys. When the MACD line crosses above the signal line, it's often a buy signal. When the MACD crosses below a signal line, that's usually a sell signal. Think of it as a way to spot changes in momentum before they fully happen. When you see the lines crossing, it can help you decide if it is time to enter or exit a trade. It's really popular tools for spotting trends and works alongside with other indicators like the RSI. And you can use multiple indicators in conjunction, guys. But we'll go over that right now. So now that you've got a few indicators under your belt, moving averages, RSI, and MACD, the real magic happens when you use them all together. Now, here is an example. Let's say you're looking at a stock that's been in an uptrend, right? You check the 20-day moving average and see the price above it. That's a good sign. Then you look at the RSI and it's creeping up near 70. This tells you that the stock might be getting a bit too quote unquote overbought. So maybe it's time to be cautious. Finally, you check the MACD and you notice that the lines are starting to cross in a downtrend, another sign that momentum could be slowing. Using these indicators together can give you a more complete picture of what's going on and help you make smarter, more informed trades. But remember, guys, no indicator is perfect. They're just tools to help you guide your decisions. Always keep risk management in mind and never rely solely on one indicator to make your trading choices, guys. Like I said in my last episode, risk management is at the top of the list when it comes to your daily checklist. Now, that's it for today's episode. We've covered the basics of indicators and how you can use them to spot opportunities in the market. But I hope that this made things a little clearer for you and that you're starting to see how these tools can help you make better trading decisions. In our next episode, we're going to take things a step further and talk about how to develop your own day trading strategy, one that fits your style and goals. Trust me, guys, you won't want to miss it. If you enjoyed today's episode, please hit that subscribe button and leave us a review. And as always, feel free to reach out to us on social medias if you have any questions or want to share your own trading journey, guys. I love to talk day trading because, as we all know, we are pretty much on our own when it comes to this day trading stuff. So if you want to go ahead and just kick a little dust of conversation and talk about day trading with me, feel free to message me on any social media platform. And the links will be in the description below. As always, guys, thanks for listening to the Trade Well podcast. And stay sharp, stay steady, and trade well. We'll see you on the next one. That's all we have for you today, folks. Thank you for tuning in. I hope you were able to gather some information and value from this episode to apply into your own trading journey. Don't forget to give us a rating and review anywhere that this podcast is hosted. Also, please don't forget to like and subscribe to our YouTube channel at Tradewell Management, where we upload our daily trade videos and a full time-lapse, unedited raw time-lapse of our daily trades so y'all can see what real day trading looks like. Thank you for tuning in. I hope y'all have an awesome day.